So if you're selling oil, you're getting dollars. Then the question is, what do you do with the dollars? So they're always going to have some, and they should. But they spent 12 years from 2008 to 2020 acquiring gold, and they had the level of gold that I described. But now they're diversifying into euros, euro-denominated securities, Chinese yuan, because they have a very large bilateral trading relationship with China, and of course we mentioned gold. And they still have, they still have a dollar position, but they've reduced that in the central bank balance sheet. But they also have a sovereign wealth fund. I don't recall the exact name of it. It's something like the Russia Fund for the Future or whatever. But it's not the central bank reserve position, but it is a sovereign wealth fund for the benefit of the Russian people. That has completely de-dollarized. They have no dollar-denominated securities at all. So the acquisition of gold is one aspect of de-dollarization. You're exactly right, Shay. But the other aspect is look at how many treasury bills they own. They have a lot. They're always going to have some dollars. They're actually always going to have a significant amount of dollars because they sell oil, and oil is priced in dollars. So if you're selling oil, you're getting dollars. Then the question is, what do you do with the dollars? So they're always going to have some, and they should. But they spent 12 years from 2008 to 2020 acquiring gold, and they had the level of gold that I described. But now they're diversifying into euros, euro-denominated securities, Chinese yuan, because they have a very large bilateral trading relationship with China, and of course we mentioned gold. And they still have, they still have a dollar position, but they've reduced that in the central bank balance sheet. But they also have a sovereign wealth fund. I don't recall the exact name of it. It's something like the Russia Fund for the Future or whatever. But it's not the central bank reserve position, but it is a sovereign wealth fund for the benefit of the Russian people. That has completely de-dollarized. They have no dollar-denominated securities at all. How many people are working, and how productive are we? That's nominal GDP. It's pretty simple. Well, productivity has been flat to down, and economists are not exactly sure why. But if the population is declining, if the working age population is declining, so you have a two-factor model and they're both going down, tell me what's happening to growth. It's not there. But you say, why is that inflationary? Well, it's inflationary because you're going to have to pay more in wages to get workers because there aren't as many workers. So Russia, the national sport of Russia is chess, right? So they're very good at looking ahead. And there are two reasons for that. One is, as I said, I expect disinflation for the rest of this year, maybe into next year, into 2022. But if you said, hey, Jim, give me your best outlook for 2023, 2024, the inflation is coming. It's not coming in the next 6 months, might not be coming in the next year, but if you go that far out, it's coming because there are more powerful forces at work that have nothing to do with central banks. And here we're talking about demographics. The global population in the developed economies and the major developing economies, which is China, is collapsing. So if growth, there are many definitions of growth, but the simplest definition is people and productivity. If they're wrong and I'm wrong and this long-term inflation doesn't come, I believe it will, but if it doesn't come, you wouldn't want any more gold than that. But if the inflation does come, what's going to happen to the dollar price of gold? It's going to go up a lot. So in other words, the gold as a percentage of their reserves can increase without buying a single ounce of gold just by watching the price go up. So you can see the brilliance of that. I mean, they've got 80% securities and 20% gold. They say, oh, I want more gold. Well, don't do anything. Just wait for the price to go up, and your percentage of gold is going to go higher. So they've got this, and then they've got oil as well. They've got this thing figured out. No other central bank or reserve position manager in the world has done quite the same. The Chinese are trying, but the Chinese have other problems. So Russia's where you should be. And I've never said, people always put words in your mouth. Jim Rickard says, sell everything and buy gold. I've never said that. I don't believe it. I recommended 10% allocation. Okay, Russia's 20%, good for them. I don't have oil fields in my backyard, but they do. But the point is, pick a number. that you're comfortable with, 5%, 10%, 20%, and get to that number, and then sit tight. You're protected, you're hedged. If gold goes down, you wouldn't want it anymore. And if it goes up, you're going to do fine. And those gains are going to be large enough to protect you against the losses, potential losses in other parts of your portfolio. So they're saying you're going to have to inflate the dollar. And again, to be clear, it's not coming this year. It might not come next year. But eventually, the U.S. is going to have to figure out how to inflate the dollar, because it's the only way out of our debt problem. And that's the American way. Just here, I'll pay you back, but good luck buying a loaf of bread because your money's not worth very much. That's the American way. We're not so good at it right now because the central bank forgot how to inflate. But by the way to do it is to raise the price of gold, just to kind of jump ahead. But they'll figure that out eventually. It's in my book, my new book, by the way. So, but the point is, the Russian knows that. So why would you want dollars if they're just going to be inflated? What would you want? Well, you would want gold, and they've got it. And you'd want oil, and they've got that. So, and what's interesting about Russia, about 5 months ago, after buying gold every month, like clockwork, for 12 years, they stopped. They haven't bought any gold in the last 5 months. Well, what does that mean? Does that mean they hate gold? No. What it means is that they have enough. Think of yourself as a hedge fund trader trying to run a hedge book. So you have 20% gold. You can see with the benefit of hindsight that was their target, and they hit the target. So they stopped buying more gold. By the way, the U.S. has done it pretty well. We just don't talk about it. We do. Just a trivia question. Most people don't know this, but if you say, well, what percentage of the United States reserve position is in gold? The answer is 70%. We're not slackers. Now, the U.S. is a little different because we print the leading reserve currency. We kind of don't need reserves. Like, we don't have a bunch of euros and yen and stuff. We have a little bit, not much, but we don't need it because we print dollars. But we're 70% gold. So the U.S. won't talk about gold, but we're in pretty good shape as well. I fear for places like Canada. I think my gold position is larger than Canada. They sold all their gold. And Australia has sold a lot of gold. Now, Australia and Canada, what they say is, well, we have gold in the ground, which they do. And if we need to mine it, we can, which is true. But unless you want to expropriate it, it doesn't mean you've covered yourself financially, because the price could skyrocket. So I think Australia, Canada, some other countries, the UK, are a little skinny on the gold side, at least in terms of reserve positions. The US is fine, Russia's fine, China's getting there. But it's almost as if the world is sorting itself into people who have gold and people who don't. But even though all these central bankers will never admit, what I just described reality. Those are all facts, but you'll never get a central banker to admit it. So the acquisition of gold is one aspect of de-dollarization. You're exactly right, Shay. But the other aspect is look at how many treasury bills they own, how many people are working, and how productive are we? That's nominal GDP. It's pretty simple.